Welcome to Catching Up to Fi, a podcast on mindset, money, and life for late starters of any age on their journey to financial independence. I'm Bill, and I'm a late starter.
I'm Jackie, and I'm also a late starter, and we're your host. We're here to help you on your journey to financial independence, no matter where you're starting.
We're going to talk to experts, other late starters, and explore topics related to our mission.
Join us as we catch up to Fi together. Say, Barry, so do you think overall this very recent announcement about the acquisition that Vanguard acquired Altruist, do you think that is overall a plus for the industry, or maybe does it impact certain parts of the industry more so than others?
So before I answer the question, full disclosure, we're investors in Altruist. The deal puts money in my pocket. There's my bias. The reason we were excited about Altruist is the idea of a clean sheet custodian built from the ground up with technology software. I love the idea of Altruist challenging the established legacy players. There's a little bit of a David and Goliath in that battle. Like, all right, they're going to be a little faster, a little more nimble. It's just so hard when you're relatively small and less than a decade old to compete with these trillion-dollar behemoths. If all these other entities are 800-pound gorillas, the 1,200-pound gorilla steps in. You know, when Vanguard launched their robo-advisor, their digital platform, it very quickly scaled to $100 billion. It became the biggest robo-advisor there was, and then kept going. I think that when you put this sort of firepower behind really great technology, really great software, this is going to immediately vault Vanguard into the top tier of custodians, not only because they'll be able to manage a ton of money separately, the way Fidelity and Schwab does. Fidelity has mutual funds, they're a custodian. Schwab has mutual funds and ETFs, they're a custodian. So not only will the duopoly become at least three companies, but Fidelity and Schwab have been doing things the way they've doing things and successfully for decades. When anytime Vanguard steps into a space, it's called the Vanguard Effect, because they will immediately make everybody more competitive and drive fees down. I don't know what it means for the industry, but I can tell you for sure the investing community, the investors are going to be winners of this because everything is going to be that much cheaper, which is a huge, huge saving. Eric Balchunas's book, The Bogle Effect, which was based on a column he wrote 10 years ago, The Vanguard Effect, said in the first 40 years in existence, Vanguard saved investors something like $1 trillion in fees. That was 10 years ago. Now, it's not just their low fees. They force everybody else to be competitive. So there's been fee pressure on everybody. This is absolutely only going to work to the investors' favor. And perhaps with the sort of human capital and money and skills and the whole footprint of Vanguard, I think what's going to happen with Altruist is going to be really interesting. It immediately becomes a major player. So I'm really enthusiastic, not just because we put money into it a couple of years ago, and it's not that much money. I wish I put more money in. It's always the case after something hits, but I think it's going to do really great things for the industry.
Yeah, I agree with you completely, because Vanguard was a disruptor. Altruist is a disruptor. So that's disruptor squared. And, you know, Fidelity and Schwab better look out, honestly.
Keep in mind, Schwab started as the biggest disruptor. Hey, we're going to offer low-cost investing. And there were a number of companies, we mentioned Robinhood, that was doing free trading. But when Schwab offered free trading, that blew up the whole fee structure of the entire industry. And Fidelity is a great shop. They've been around for almost 75 years. Schwab has just such a loyal following amongst investors, and they certainly have been a disruptor. But every generation, somebody else comes along and blows it up. I think that's what we're seeing with Vanguard. Listen, I assumed someone major would buy them. And because Bill McNabb, the former CEO and chairman of Vanguard, was a funder and an advisor of Altruist, it's not a surprise that it was Vanguard, but it could just have easily have been Fidelity or Schwab. And I'm an investor in a couple of other startups like that. And I think the way the world progresses is you just throw a lot of stuff up against the wall. You never know what's going to stick. Maybe it's an app that allows millennials to trade for free, or maybe it's a custodian that is built from the ground up with AI in it. But nothing stands still. If you're not moving forward, you're falling behind.
We wanted to get this conversation out to you as quickly as possible because the news of Vanguard acquiring Altruist was announced just as we were recording with Barry on August 26th. This is a huge development in the financial advice and investing world, and we had the incredible timing of having Barry with us to give his immediate reaction, not only as someone who knows this industry inside and out, but also as an investor in Altruist himself. So rather than wait for the full episode, we wanted to share this part of our conversation with you right away. But this is only a small piece of a much bigger conversation. Our full episode with Barry Ritholtz is coming very soon, and we cover everything from investing mistakes and behavioral finance to the power of compounding financial advice and some of the lessons Barry has learned throughout his career. So if you enjoyed this special episode, be sure to subscribe and turn on notifications so you don't miss the full conversation with Barry Ritholtz. We'll see you soon.
So, Bill, as you know, we cannot do this show without our amazing staff and the people that help us put this on. And our editor is Fritz Brizard. We love them and they keep us going.
Yeah, Jackie, I mean, this show wouldn't have the quality it has without our folks, our peeps. And we'd also like to give you a few calls to action for the show. We love our community and we hope you love us back. If you would like to support the show and our mission to help late starters, you can do that at Buy Me a Coffee, which is a platform that allows you to make a donation. The link is in the show notes and on the website.
Check out the show notes for resources mentioned in today's show. Also, head on over to our website at catchinguptofy.com and check out our vetted resources, partners, and affiliates for discounts and their services because we love sharing great deals.
Please share the show with others and head on over to our Facebook community to help us grow. If you prefer video, head on over to YouTube and watch the show there. We hope you've enjoyed this episode of Catching Up to Fi. We would appreciate it if you could also leave us a 5-star review to help our message reach others.
And while we are financial educators that love to teach, remember that our content is for general education and information purposes only. We are not providing financial, legal, or tax advice. Always do your own research or consult a professional before making important decisions.
So, Jackie, we'll see our audience next time on Catching Up to Fi. Cheers.